Hi everyone, I'm Paul and welcome to my market update for the 7th of September 2022. Over the last few updates, I've talked a lot about the Fed and inflation, so I'm not going to cover any of that in this video. So if you're interested to find out my views on that, I'll put some links to those previous videos in the description. Instead, today I'm just going to focus on the dollar, which is at 20-year all-time highs, Bitcoin, Ethereum, and the S&P. All of these risk-on markets are on a knife edge in anticipation of the US CPI data that's coming out and the looming Fed decision on interest rates. So please, like this video, subscribe to my channel, and don't forget to turn on notifications so that you never miss an update. Now let's jump into today's video. So we'll start with the US dollar index, or the DXY, and we're looking at the monthly chart. Now we've talked a lot about the DXY in past videos, and so a lot of this is really just rehashing what we've talked about before. But you can see how strong this trend has been. Remember, we're looking at the monthly chart, but this trend has been extremely strong, and you can just see we've blasted through these relative equal highs up here, and this buy side liquidity that we have resting up here is the 20-year all-time high. So if we hover over here, you can see that we're at September 02, so 20 years ago. So that's pretty remarkable, but it's testament to the power of this rally that we're seeing. But where I'm anticipating the dollar to go is up to this swing low just down here, and then to poke into this bearish fair value gap that we formed on the way down all the way back here in July 02. So that's sort of what I'm expecting, and I sort of think that it's going to look like this. We'll sort of poke into this range, consolidate a bit, maybe we'll poke up even past that sort of second standard deviation mark before we consolidate and then start to trade back down. So we may come up and start to test these levels. We'll just have to sort of see once we take out that swing low and start to trade into that fair value gap. We'll just have to see if we paint a swing high pattern or if this trend continues. So just given where the macro environment is, it's possible we might continue through this level, but what I'm expecting is it will consolidate in and around this fair value gap before we start to come back into the new year. And that'll be our signal really that it's risk on, and then we can start to look at some of these risk on markets like the S&P and other stock indices, or crypto, looking at Bitcoin and Ethereum. So we'll shift over to crypto now, and we'll start by looking at Bitcoin. So we can see the rally that we had in Bitcoin from the lows was pretty substantial. It was about 40%. So from the lows, you can just see it was this really methodical rally upwards, but we could just never really breach this swing low here. So this spike that we had down just acted like resistance, and the market could just never really get through it. You can see once we came up here, we almost touched it, but almost immediately the market started to fall. You can see we painted this bearish fair value gap here, then we broke this swing low here, taking out this sell side liquidity, and that started to generate some more momentum to the downside. Now, if we zoom in, you can see that we have this double fair value gap, this double bearish fair value gap formation, which I call like a truck and trailer when you have these connected fair value gaps starting to form. And you can see we're starting to form even another one now. So this daily candle hasn't closed yet, but when it does, it's most likely going to form another bearish fair value gap here. And so what does that mean? So if we zoom in a little bit more, you can see we have this sell side liquidity here, which we've already taken out. And then really the next stop, or the next most likely place that liquidity is going to draw to, is back towards these all-time lows down here from June. So what I'd expect is once that fair value gap has formed, we'll get some consolidation in this zone, a trade up into it, and then we'll get another big push down. And I think that's where we'll take out this sell side liquidity, this previous low, and that could really start to create a lot of downside pressure, and we could see potentially that big move down towards that 12,000 mark, or at least the start of the move down towards those levels. If we think back to what the dollar chart looked like, there really doesn't seem to be any end to that rally, and as long as the dollar stays strong, Bitcoin is going to be weak, and I think we're going to see more downside. So switching gears, still in crypto, but to Ethereum now. The thing that immediately stands out about Ethereum is that the rally from the lows back in June up till the end of that rally in the middle of August was just significantly stronger than what we saw on Bitcoin. So that's quite unusual to have an Ethereum-led rally, and there's probably a number of reasons for this, but the main one seems to be the narrative around the merge. So that's really been driving this outperformance of Ethereum over Bitcoin. But as I've said in previous updates, any rally in crypto that's not led by Bitcoin, certainly historically, wasn't very long lasting. And that's sort of what we're seeing at the moment. We really need to see Bitcoin leading the way, and it tends to drag everything else with it. In saying all of that, at the end of the day, the rally in Ethereum was stronger, and it just looked better on the charts in general. You can see from those lows we rallied, it was much stronger, and then we took out this buy side liquidity, these relative equal highs here, we tagged into them, and then the market started to fall away. So similar in its appearance to the way that Bitcoin's pulled back, you can see we have these two bearish fair value gaps, again this truck and trailer pattern. So we had this first one form, we traded into it, we came down here, you can see we took out this sell side liquidity over here, we traded back up into this fair value gap again, slightly different to Bitcoin, we completely filled in this imbalance, and now we're starting to trade downwards. This is where you can still see the strength of that narrative around the merge. So whilst Bitcoin is currently drawing towards those previous lows back in June, you can see that Ethereum has been much stronger, and we're really targeting this sell side liquidity equal lows down here. So whilst the market in Ethereum is bearish as well, it's coming from a much stronger initial position. So one of the dangers of this, of course, is that Ethereum ends up catching up, and this narrative around the merge just sort of goes away. And if we keep getting a strong dollar, if we have some bad inflation data, and that position of the Fed stays the way that they've talked about from the Jackson Hole meeting, then we could see a substantial pullback, so a disproportionate pullback in Ethereum. So it comes back to, closer to what parity would be with Bitcoin. And so what does all that mean for Ethereum? Well, I think we're likely to see lower prices in the near term, and that's most likely going to be, an attack down to these levels into this sell side liquidity. And just because of the relative closeness of this swing low here and this sell side liquidity here, I wouldn't be surprised if we poke down into that level as well. Once we get to that level, we'd really need to reevaluate the price action. We might get a bit of consolidation, but as you can see, because this rally was so strong, we created a whole bunch of inefficiency here on the way up. And of course, the problem with that is when the market's pulling back, that efficiency will get filled in really quickly as the liquidity seeks those imbalances on the way back down. And so this would be one of the things I'd be quite concerned about if I was long in Ethereum now, is because the pullback could be quite savage. As I said, we could have that disproportionate pullback to try and bring Ethereum back into closer to parity with Bitcoin, and that would be when we hit these imbalances and it really accelerates to the downside. And so the last chart we're going to look at in today's video is the S&P 500 or the ES. Now the reason we want to look at the S&P is that correlation between Bitcoin and the S&P is still very strong, and ultimately whatever happens in the traditional stock market in the S&P, it's really ultimately going to drive what happens in those high risk markets like crypto directly into Bitcoin and Ethereum. And so it's really important to have a good read of what's happening in the S&P and of course in the dollar, because that's really going to ultimately drive what happens in the crypto markets regardless of what their charts look like. In saying that, our chart on the S&P looks fairly similar to the one that we saw in Ethereum. So we had the lows down here, we can see we've had a strong rally, we came out and we took out this buy side liquidity, these relative equal highs, we painted this swing high pattern here, and you can see the market immediately started to peel away. We've painted these two bearish fair value gaps on the way down. Again, we have that truck and trailer pattern again. So we have first fair value gap, we trade right up into it, almost completely closing out that imbalance before a powerful move down, which creates that next bearish fair value gap. You can see we break market structure, we take out this sell side liquidity, we paint this fair value gap here, we just touch into this one, we don't go back into that imbalance like we did in the first one, and then the market has really fallen away quite sharply after that, and we've taken out this sell side liquidity here. here. And so our next question is, where is liquidity most likely to draw to given where we are at the moment? So just given where we are, and obviously with that understanding, we have the backdrop of CPI data and the Fed's announcements coming up quite soon. It seems to me that it's very likely that we'll consolidate potentially around this level here, around this sell side liquidity. You can see we've got an order block just sitting here, so I wouldn't be surprised if we have a bit of a consolidation. And what I'm expecting is not great CPI data, and even if the CPI data is not too bad, that the position from the Fed is going to be fairly staunch. They're not going to switch to, a pivot, which is what a lot of people are still banking on. And I think that's going to create that trigger, which is going to create that sell-off. And the most likely next point of liquidity that the market, I think, will draw towards is going to be into this bullish fair day gap that we formed on the way up. So I'd expect we'll see consolidation and then a push down into that zone. Once we get there, we'll just have to again reevaluate the price action and just sort of see what's happening. We could possibly have some more consolidation at this level, and then obviously our next levels that we'd be looking at would be this swing low here and any sell side liquidity that's resting below that. And so, we could get even a push down lower into the future. That's a little bit too far out to sort of predict at the moment, but certainly I think that short-term price action will have some potential consolidation around this sell side liquidity, this swing low where this order block is. And then I think coinciding with some of that news that we're expecting coming up, we'll see a move down and the liquidity will seek out this imbalance just here before we start to see a little bit of consolidation. Of course, it's entirely possible we get a much bigger move than that, but we'll just have to wait and see. That's all for today's video, and I hope you got something out of today's market update. If you did, it would be great if you could like it, because that helps other people to find it. And make sure you subscribe to my channel and turn on notifications so that you don't miss any future updates. Thanks for watching, and I hope to see you next time.